All right, so what I'll do is start out with kind of like I normally do, just have my normal routine. Some of you guys have probably never, you've never been on a Zoom with me. Some of you, a lot of you might have. I've been trading I started trading currency like maybe 4 years ago, and I was trading, just holding metals like long term before that, as well as trading stocks. My family has like traded metals for a long time now. My grandpa, then my dad, and then I was tracking the market since I was just a kid, like getting ounces of silver and stockings, things like that for Christmas. And I didn't really care about it then, but now I understand why, and I would rather have that than any other gift. But when I got into currency, I started trading with Hussein before his group blew up, like a few thousand people, and there was just like 12 of us trading there. But he and I have been together like ever since, and now I'm just trading with no risk and doing things like that. So I have I have a couple interesting things to show you guys, and it might clear up maybe some of your guys' trading as far as terrible positions. It might not do anything at all. Who knows? So now I'll start with gold, but I have a few things. We'll just talk about a couple positions I took last week, as well as like a position I was in last week that I closed the market out in. And I actually ended up closing it with a little loss here, but I'm going to explain to you guys what it is that I'm looking at and how my reentry is going to go on this if this trade wants to present itself. So 1 second, someone is saying they can't get in. Angel, if you're on here, can you go to the no risk like main chat and figure that out for me? Possibly. D Wayne's got it. There is no password for this. There's no password. The link is inside of live trainings. But anyway, so with gold, like some of you guys might not know, but I've tracked gold again since I was a kid. Gold and silver, mainly silver. My grandpa was he was trading this back when it was at like $6 and $3, and I think gold was like $400 an ounce or something. And anyways, that's just kind of where we started from with this, and that's why they're just my go-to. The metals are. Now I'll pull something up. A little bit ago I posted it caught a little traction, like just on the internet and stuff, and I would post things like on my Instagram stuff, stories, things like that. But I had posted a while back. Obviously a lot of people don't understand the fundamentals, meaning like news behind the bull market that is happening in the metals right now, as well as like you have things across the board, the S&P, you have things like Bitcoin, right? That are soaring now. There's more that I care about than others. Some I don't care about at all, but there's an easy explanation behind really all of it, and it's pretty simple. And being with no risk, like everyone that is in no risk, as far as like the paid group, they all understand what it is that we have been tracking for. I've been saying the same thing literally for years. So I'm assuming it gets kind of old for some people, but I'm just pulling this up now. Something for you guys to see. A long time ago, this was in the group chat, 7/14/2020, right? So this is when silver was just in an accumulation phase. Now, a lot of people would like to argue that silver and gold had maybe a bear market, but I kind of tend to disagree. We have just a point of consolidation, big bullish move, a point of consolidation, and now we're getting ready to make another massive bullish move. This is only the beginning, and this is where I was posting in here. Silver at $19 an ounce. Once we spiked those lows down there and just took out all those lows, I matched it to the gold analysis. Really easy move, all-time highs, same exact pattern. There was a breakout on a monthly candle on gold, and I was explaining how silver is going to literally do the same exact thing. And to avoid the emotions and volatility on the trading account, load up on the physical silver and hold it for the next few years. Now, this thing, obviously, since the 19 we had on silver, if we go in here on the monthly, of course, we had a big breakout, and this thing, what I like to call is like a super cycle, is going to start again on the metals, and these things are going to fly to the moon. So just like you see Bitcoin kind of ran the same pattern, consolidation, huge correction, consolidation, and run on the lows, and price just takes off out of here. Gold did the same exact thing. That's exactly what silver is doing. So don't be fooled by what's going on here. Some of these, most people don't understand why it is that they're going up, and why we kind of started heading this way. Now, the current update on both gold and silver, why have things been going up, right? So we go back to like December, right? December of 2019 down here, when we had the very first big push out of here outside of interest rates. We had Soleimani get hit with the drone strikes in Iran, which we're going to get into more Iran tonight. But we had the drone strikes, and then we had more interest rate decisions. And then right before that, right after that, we had the March sell off across the board. So if we go look at Bitcoin, if we go look at gold, silver, during March, big March sell off. If we go look at the S&P, right, US 30, big March sell off. The reason being, we go look at the dollar, there's a huge spike in March, right? So we go look up at the DXY, a huge breakout. This faked a ton of people out too. But what happened here was people will leave when there's a huge or just any kind of economic, like any correction in the economy that's excessive, people will flood to pull money out. They don't want to hold on to their investments. They want to get liquid. They need cash. Things aren't looking good. So that's why the US dollar spiked. Meanwhile, everything else had inverse correlation. Let me mute this person out. Keep yourselves muted too. I've had to mute someone out in here like probably 6 times since we started, and I'm just not going to keep doing it. So I don't want to have a bunch of background noise. But what happens is people will run and they'll liquidate their investments that aren't important, and they will load up on their money, right? And their savings, things like that. So that's why we had that huge spike. Then after March, when all the stimulus started and all the money printing, right? Low interest rates are going to drive a market like S&P, gold, Bitcoin, things like that. Because the lower the interest rates, the cheaper it is to invest your money, buy houses, etc. And then we have things like the dollar, which are going to be an inverse correlation for the most part, which just go down, right? Interest rates are high, the dollar's going to spike. They're low, the dollar's going to drop. We have things like stimulus, mass money printing. What does that do for the dollar? It devalues it. The more you have of something, the less value it has, the less people want it. So the more money we print, meaning the more stimulus we give out for, in quotations, free, right? The more this US dollar is going to tank. Now, we have recorded Zooms like with the No Risk Group, literally since up here at 97, talking about the meltdown on the dollar, points where the market's going to bounce, and where we're going to continue down to long term, as well as there's going to be a currency reset because there's no coming back from this. So things like gold and silver, they're going to go through the roof. Things like the dollar, it's going to create all-time lows until we have to create a new monetary system because it's not sustainable anymore. So now, any questions with that? Because I might go kind of fast on certain things. Anyone have any questions with that? Some people don't understand what fundamentals do to the market. And the more you stick around and the more you actually want to trade or invest, the more you're going to learn about these things, because it's what keeps you alive. A lot of people say, I only trade technical analysis because that's all I need. No, it isn't. Because things that are in it, that just are going to keep going lower and lower and lower, they're not technically driven, which doesn't allow you to get in. They're fundamentally driven. So something like the dollar crashing and gold just going up and up and up and up, I literally didn't do any technical analysis. And when I seen on a daily pattern, when I seen underneath these daily lows, a head and shoulders form right here, just like this. And I talked about this, a head and shoulder right here. As soon as that broke right there, I put a buy in on gold because I knew that stimulus was coming. On that week, I had announced it to the group. I'm going to buy gold this week. Stimulus is coming. More trillions being printed. It's just going to stimulate the gold market. And if we go to, let me pull this over here 1 second. Let me pull something else up for you guys. Just 1 second. I need to go to the no risk trading view account. And I want to pull something else up as well. The gold long position, right? So this is on the no risk trading view. And I had put a gold position out there talking about the technical analysis, which I'll explain tonight, but as well as the government continues passing stimulus. And this is what ultimately stimulates, it'll push the price higher, right? And I was talking about how at the time I was literally typing this out, another stimulus package was passed, and the price on gold is bullish, as well as the iron tension. They keep bombing, shooting missiles at the U.S. embassy, as well as, you know, just moving things around. And we've moved some aircraft carriers there. And it's just, things are on edge. So that also will stimulate the price of gold. But here's the gold analysis, right, that I had posted. And this thing is going up. And this is what I'm talking about. People will get on here and comment things like, price has been pushed up. Institutions need more liquidity unless gold breaks 1910. Downtrend still in play. Not true. If you understand the fundamentals that are coming in behind this, you understand that the technicals are out the window. So I can randomly place a buy, knowing what's coming, and put a decent stop on, and I'm good to go. It's just investing is all it is. It's not, at that point, I'm not really intraday trading. I'm really just holding on to my fundamental ideas now. Something like this trend line, right? This is something I expected to break. We bounced into it, bounced into it, bounced into it. We came in here after this massive daily washout. So what I mean by that, something else that I talk about, like with no risk, are FU candles. And it's just when a daily support is taken out. That's the F candle, and the U is when it closes back into the range. And what happens here is that daily support gets washed out, and that candle will close back in there. So breakout traders, these buy positions get washed out. The breakout sellers try to take the retest, and price ultimately closes back in and just keeps running in that initial direction. This happens all the time. It's a pattern that's been repeated on gold for months now. It's something with no risk that we have pointed out over and over and over. It's an easy pattern. Does it every time. This thing's running back to the all-time highs this year. I wouldn't be surprised if we don't see gold end up at 2,500 an ounce. And if we don't see silver make a run this year to at its all-time highs, which silver lags, but percentage-wise, we clear a little more ground on silver. So I'm not going to be surprised if this year we don't end up at 35, 40 bucks an ounce on silver. If not, we break the highs last quarter or something. It's not far-fetched. And just understand why the market is running how it is. The more stimulus that's coming, and it doesn't. And then on top of that, normally, as I would say, like a Republican as president, I would be a little less like, how should I put this? I would be a little less. The monetary policy would be a bit better, as far as a Democratic monetary policy would be better for the metals going up, right? But that has not been the case with Trump. As a Republican, we have seen more money printing than almost ever before at just rates. It's insane. It's unexplainable. So it doesn't matter if this election gets overturned. It doesn't matter. Either way, this portfolio that like I have built around this idea, it's going to perform. It doesn't matter if there's a Democrat or Republican. And by the way, I always tell everyone, don't get too caught up in the politics, because at the end of the day, like, none of these people truly care about any of us. Just know where to put your money at. Don't get too hung up on who it is or how they're going to do it. Just know if they win, how are you going to make money off of the win? And it doesn't matter. Being in the metals is a win-win. Biden's going to print uncontrollably with a more of like a socialism outlook. And Trump has also proved to us that, you know, if people wanted somebody like Bernie Sanders and they didn't get him, well, they got him with Trump, because he's just free handouts all day. Stimulus checks, like It's uncontrollable. It doesn't matter who we have. This is going to go up regardless. So that is a way you guys can be prepared. I wish some of you would have heard a long time ago about us talking about the prices of coal way back in 2019 when things were down 1,300, $1,200. It's been the same conversation every time we get on a Zoom, and anytime I hear someone calling for the fall of it, it just I'm not surprised. People constantly trade against things, and it doesn't surprise me at all. So just understand this thing. It's not coming down. Don't try to catch it for a cute entry at the top. We're gonna have pullbacks during times like this when there's a meltdown. Uh, I love to watch the internet because once something breaks out like this, right? And these are my favorite trades. These are my favorite kind of trades. The way I like to think about this is no CEO is going to get rich buying high. No bank, institution, any of them, they don't get rich off of buying at all time highs. What they do is they wait for these times where the market washes out all the weak hands, people fold, and that's when they're able to buy up enough contracts. That's when enough contracts are opened up to buy, right? So when things are really just dropping off like this and people are wanting to sell out, this is opening up the space for the bigger hands. And if you can kind of capitalize on knowing when it's happening, you too can make a decent move off of that. And what happened here after we seen this big washout, none of the fundamentals have changed all of 2020, right? So I knew when this big daily washout happened, I knew, and the whole no risk group knew too, because we were sitting there watching it. A big weekly bearish candle. The whole world on Instagram is talking about this thing's melting off. It's done. You watch. I just keep my ear to the floor always. I watch other trading groups quietly. I see what they call, and for a lot of people that have also traded with me for a long time, they know I love doing the opposite of a lot of people. I mean, if I see a group of 30,000 people and them calling short positions on gold, I'm going to go in there and find a reason to buy this. That's just the way I am. And I'm going to capitalize on, like, in my eyes, like dumb mistakes, that if people really understood, then they would know better. But at the time, we just had a big bearish weekly candle, and I'm just sitting there going, the fundamentals haven't changed. This is a huge washout off of a weekly support. This thing is going to close back in the range test, and it's going to rip back to the all-time highs. So again, just understand the thought process. These bigger hands, when everybody's fearful, that's when they're scooping up those contracts to run harder with it, and the market makes those big runs off of that. So anytime that we break these big daily supports, I'm really curious. I'm curious. I'm watching everyone. I'm watching what every other trade group's doing or whatever. And I even said so just with like the admins of No Risk, I was going to let this out tonight on the call, but it happened way too fast. And what I was looking at was this trend. We tapped into it, tapped into it, tapped into it. I already knew we made the washout on the buyers. I knew what I expected from the TradingView analysis that I dropped on TradingView itself. I already knew what I expected. And let me explain one thing about a technical side of trading. And some of you guys will think this is amazing, and some of you guys won't care. It's just the way people are. To me, there's something that I like to trade it's what I call like an equilibrium, right? And what I like to do is find, if you guys know Trap King at all, which I'm sure a lot of you guys do, what I like to do is pair these washouts. I like to look at things which I won't get into. I do more like with the group, but market cycles on accumulation and distribution side using something called Wyckoff. And I also like to find, I've been getting more into using price traps as well, because when I first started trading currency, I started using price traps. And there's something that sits in the middle of those, and it's called an equilibrium, and it's a 50 and a 618 retracement of a specific price consolidation or price zone, whatever you want to call it. Okay, and so what I mean by that is what I like to do is I like to find these candles. I like to find these candles like this, and I just like to sit and wait. Like I'll be sitting and waiting, and I love seeing washouts on both sides. And what I mean by that is I love seeing when the market squeezes short sellers or buys. I love seeing that squeeze, and I'm pretty good at noticing when it happens, as well as pretty good at getting caught in it sometimes too. So these are some of my favorite times to trade. And what I do is I wait for that thing to break in my direction, right? So if I'm bullish on something, I'll be waiting for this thing to be showing some bullish pressure, right? Like a move to the upside. And then what I'll do is I'll let that thing break a low, obvious lows, right? So something like this, I love to see that breakout. Now, a good way to play off of that, like on a technical aspect, is you can go back into that range, right? And now when this market breaks back up into your box, your consolidation, your price, the range that you have your eye on, when it breaks up into that, you can actually fib this out. And you can look at a 50 and a 618 on this, and you can sit there and wait. And when this price breaks back above that 50 and 618, and you have successfully seen a low and a higher low and a higher low and a higher low, you can play that level as a buying area back to the upside. And it's a really nice measured move. You can clone that box and put it on top, and you can run that market now back to the upside, and it'll line up perfect with structure where it'll turn back around. So when I had buys down right off of this inverted head and shoulders, or this normal head and shoulders, and I seen everybody short on gold, what I did was I did no technical analysis. I bought it. It was during London session. So this 4 o'clock candle, I bought this. I bought gold. I threw a stop on. I threw a stop somewhere under here, and my target ultimately was back to the upside on a measured move that I had. Right, I've already scaled out of this by now. Just so you guys know, I think I told the group when I did it, when I bought it, and when I got out, it's something like 600 pips. Outside of like Bitcoin or indices, it was the biggest trade of the year for me as far as pips go. Some of you guys might not think that's enough, but oh well. And just structurally, this is just, it's perfect, right? When this price breaks back above that 50 and that 618, those are the times that now you can realize it's time to buy this. And what I really like to see is I like to see, instead of a huge move ripping to the upside, which is why we're going to talk about EU, I like to see a little bit of structure bouncing off of these levels as we're breaking back into it. Again, I want to see higher lows being created on the buys, or vice versa for the sells, lower highs. So I'll be watching that wash out, and that's no man's land for me. There's nothing there, so I don't want to try to get greedy and buy here. Although the risk reward is way better, I'm over it. I don't really care. I don't care to have something that's, cute for Instagram. I'm here to actually make money. I don't care if I take drawdown. I don't care. As long as in the end the trade goes well, that's fine with me, and that's the reality of trading. So I like to see what I see, and then I like to pull the trigger. And again, on something like this, if I have to have a stop below the lows, below my price trap level, that's fine. I'll put a trade on there. And I'll explain it like this, because I was on a Zoom with somebody last week, and they were confused about how are you taking these trades and using these big stops and not blowing your account? And this is why I told them there's a ton of math and numbers behind trading. And at the end of the day, it just comes down to numbers. And it's actually not trading itself. It's the risk side, the risk management that goes into trading itself. It's not the trading. It's how you manage the numbers that keep you alive every week. So what I explained to them was, okay, let's say that I have, I'm trading a prop account, right? And let's say that my prop account is $200,000, and I want to risk 2%. So 2% of 200,000 is 4,000, right? So what I'll do is I'll take $4,000, 2% of the account, win or lose, and I will divide that by my stop loss, right? So I don't, the thing is, people go, I want to use a 20 or 25 pip stop. Well, let me ask you something. If I'm going to buy up here and my nearest low is down here, doesn't make sense to go up here and buy and then say, like, I'm going to use a 20, 25 pip stop. No. What it is people try to like impose like a P&L. They trade their P&L. They trade, if I see myself down this many pips, I'm down this much money. I don't want to do that. Or it doesn't fit the structure. You're trading your trade and putting your stop loss around a monetary aspect, not like technical analysis, and not where it really should be. And you might know that it should be down there, and you don't do it, then the market drops and it wicks you and it goes straight in your favor. And then you're sitting there like pissed off, like, why did I just not do what I knew I needed to do from the beginning, and not get greedy and not try to triple the account and use proper risk? So this goes back to like a ton of people I see all the time want to hit these grand slam trades for these, trading groups and Instagram and blah, blah, blah. And they want to triple this account overnight. It's the most ridiculous, the dumbest thing I've ever seen. And I watch people do it all year long. And then I go, well, what if you just would have used that risk, that proper risk? Where would you be at the end of the year? Not multiple blown accounts. You would have made money, whether it's 1% a month, a half of a percent, a 1/4%, it doesn't matter. You would have net something had you done it properly. So with this, like, this is proper structure. This is where stop loss belongs. 372 pips, that's seems like a lot, but there's math behind this. If I want to risk 2% and $4,000 is 2% of 200,000, all that I do is take 4,000, right? I take 370 and I divide it by 4,000 and I divide it by 370. I get 10.8. So I know my lot size needs to be 1.08, and that is 2% risk. Simple math, very simple. And on a $200,000 account, that's nothing. Now, if you have something like $3,000, $5,000, right? It's still these things don't matter. It doesn't matter. You're still going to risk 2%, whether the stop loss is 25 pips or whether it's 100 pips. The risk is the exact same. If my stop were to get hit at 25 pips and I had 2% risk, I'm still going to lose the same amount of money. It's the dumbest thing I've ever seen people do, and it doesn't make. And I used to do it too, which is why I hate on it so much. I used to be an idiot. I used to try to hit grand slams every single trade, and this junk is exactly that. It's junk. It doesn't work out for me. So I suggest really looking at the psychological side of things, the risk itself, and ask yourself, are your numbers even right? Because most of the time, if you had to honestly answer yourself, it's no. Your risk is probably trash. Like most traders, sometimes I get carried away too. I literally used to do the same thing. So let's say let's say I want to let's say I want to risk 2% of 3,000, right? Say you have a smaller account, $3,000, reasonable. So that's $60, 2%. So let's say that I have I have let's see here. Let me think about this for 1 second. I've never been good at math, so sometimes when I'm on a roll and I got to stop and think about something, I really need to think about it. But essentially, if I have $6 a pip and whoops, 1 second here. What you're gonna do, the way to dumb this down pretty much, which I have to sit and do to myself, is what I do is I take 2% and I will divide it by my stop loss, and that will tell me exactly where my lot size needs to be. Even though somebody's asking, even though there's a big gap for gold, it's not going to go back down and cover the gap. Gaps don't always have to be closed. And if you're kind of referring to the trade idea on the short position that I told you guys about last week on gold, we actually took this with the no risk group. Let me pull it up real quick, and then I'll get back to my thought. Sometimes I'll be kind of everywhere. Here it is here. So we were talking about, just close. I was talking about the trade idea that I shared on gold, the short position off of the 2-hour kill zone, close 150 pips. Now, the market won't always fill a gap. And what I mean by that is last week, right? I'll be paying attention to gaps specifically in the foreign exchange or even the metals, right? And let's think about this last week. This would have been a gap up on the market open, would have been right here last week. So we had this gap up on the market open right here. Now, something that you guys can keep in your notes is that take a look at every other candle on a 4-hour time frame. There's wicks on both sides on probably 90% of these candles. Especially the more major the candle, the more the higher chance of having a wick on both sides that there's that it's going to come with. So on that specific day over here, you can see that there's wicks on all of these daily candles to the upside and the downside. And last Sunday, this market opened right here and just shot straight up, and we were watching this, and I had the buy idea down here too. So I thought I'll fade the market back to close the gap on the market. I'll short it off of this, what we call a kill zone that we also show. I will fade the market off of this back to the downside, close the gap, close a position. I had the buy limit ready, and then I would continue with the direction that I wanted. So to answer your question, there isn't always going to be that idea. And tonight, I specifically didn't have the idea of making a wick on the bottom of the daily gold candle because I don't think that we're at that level. I thought we were at a breakout level. I knew, just like last week, I wouldn't try to short gold because it didn't make sense this week. Last week, it did. It made sense to me. It was within the structure, within the idea. Now it isn't. It wasn't. My idea was to actually buy gold off the open, right off the rip. This thing just shot through the roof. I had no time. I was honestly playing Warzone when it happened, when the market opened, and I didn't even have time to look at it. So that's that. I didn't have a chance to get in, but not every time. I won't always fade a market back towards a gap. A gap won't always get closed, which a lot of people say every gap gets closed. Always, it doesn't. It's not always going to happen like that. So don't think just because the market gaps, Tanner said to fade the market back to the gap. Well, yeah, I mean, at some point you probably could, but then where? Last week, that's where I wanted to fade it. But it's like, if you were going to try that, then where? Where are you going to do it at here? Like I showed on the trading view, we had clear range once we started to break out, and we were going to run that range. So I'm not interested in trading against what I know or what I think is already going to happen, right? So let me see here. What else was I going to show? Oh, I was going to show a couple other just trades based on structure. I'll talk about EU first to keep things kind of interesting and give you guys something more real time, because this is real time and this is a trade idea that I am currently looking at and that I have already given out. 1 second here. Let's see here. So what I'll end up doing here with EU, see, I was already in the short position, right? I was actually already in this last week. I had posted this trade idea. I can also pull this up to show. We were eyeing up a few things. We were eyeing up a GU short. It came down, barely missed our buy limit and took off. Euro AUD. I'll explain that trade. I'll explain Euro CAD. I'll explain EU and my idea behind this, as well as you guys can actually probably take this tonight. I'm going to get back in if and when it does what I want it to do. But what happened here, I explained, was that there's this big daily trend here, right? And yeah, we all know EU's bullish, and some people are going to say, well, why would you short that? Blah, blah, blah. Just understand that we are really overextended on EU, and we are kind of running into some structure. Now, I still think that in the long term, we are bullish on EU because I am bearish on the dollar, right? And you could see the dollar come down, bounced right off of, you guys remember me explaining the gap on gold down to the downside, right? We have these things at no risk we talk about called kill zones that we trade off of. This is a 2-hour kill zone. Same thing on gold short position to fade the market back to the gap. This is the same thing that I figured on the DXY. This market's got a gap. We're going to fade back towards it, and hopefully we can gain a little steam on the dollar. Fundamentally, it would make sense that we were supposed to have $2,000, or people were supposed to have $2,000 stimulus checks. It didn't get passed. Only the $600 did. So seemed like a more dissatisfaction, even though the stimulus got passed, more short term. And I think whichever president gets in, doesn't matter whoever gets in there, if they overturn it or not, both are going to fire it up again and print again. So with that being said, I was expecting a dollar to bounce soon. Until then, possibly. And we were running this channel here where we keep bouncing off the bottom of this trend as well as the top. Now I'm eyeing up that if this dollar can break this 90 again, we will have a nice run back up, 89.9. We'll have a nice run, at least back up to this trend line, which I think it breaks. And then to head further up towards like 94. And if we bust that level as well, this dollar could have a big pullback. That would make sense with an overextended dollar. Now, that's kind of an outlook. I'll just watch it day by day. If the structure keeps breaking to the upside, then I'm going to favor dollar buys. If we continue to violate it and break to the downside, well, then that would mean GU buys are on, EU buys are on, UCAD sells are on, UJ sells are on. Anything USD XXX would be a short position. Anything XXX USD would be buys, or my fault, USD XXX buys, and then vice versa for the sells. But EU here, so what I had was this daily trend was broken, right? And it's the same structure that I explained on gold. Something that I like to see structurally, which this is something for you guys to start doing in your own trades. What I like to do is find things, like I'll pair a few things up. I'm not a big trend line trader, but I will use them. And we have been just tapping into this daily trend, and we broke it. Now, let me compare one thing about this trade to, let's say, gold buys that I took, or gold buys. Yeah, gold buys, I took them down here and was watching up here too. But let me compare one thing. Notice that we have the structure down here where we broke out. When we broke back into that range and broke back above what I like to call the equilibrium of the price trap itself, I want to see, is there structure off of the bottom of that price trap? And if there is, then that will give me a proper spot for a stop loss. If we go back to EU, right, as well as the DXY, when the market opened, I was watching the DXY dump, and I wanted to see if we could hold a low and hold a higher low to trade back into this level. And if so, EU sells will be back on, because what I was looking at here was that daily trend broken. We topped out, and remember me telling you guys about FU candles? If we go back on the daily on EU, FU candles are just breakout and fake out candles. There's the F looking like it's going to fly up. So breakout traders, they'll take those buys, and then the U candle, it's the FU. The U closes back in, it gives a nice test, price sells off. A few things that I'm looking at here. What did I just tell you guys about? The kill zones that we like to see at no risk, we always trade off of them. There's a kill zone sitting right here on a daily, which is they're more powerful. The higher the time frame, the better they are. So I was looking at this daily kill zone here, and as well as I have this price trap, right? Again, it's just like consolidation, and it's just consolidation. And what I like to see is, will this market break out in my favor? So I'm looking at, I was looking at a candle within here that the price, this price was trapped in over here. I noticed that the market moved in my initial direction. So we go back, we compare to my gold buy. What happened? The market broke out in my initial direction from this consolidation here. It broke out in my initial direction. It violated it. It retested the 50%, and now gold is rallying off. It's the same thing for EU, just the opposite, right? This the same setup, just the opposite. So I have my consolidation. I look for price to break low, to violate the top. And now what I was looking at was to see if price could hold a lower high here off of this level. Now, if it holds that higher low, or that lower high, what I can see off of this would be that this would be a fake out, breaking back over the bullish trend line, and that price is going to come back down to my equilibrium, right? If I fib out this trap, the high to the low, price is going to come right back down. It's going to give a nice test on that, and EU is going to have a nice move, like a really nice move. This is something I'm not going to miss, and it's been something I've been waiting on, specifically like for a dollar correction. I know there will be a nice move when this happens on a few different pairs. So like things like this are what I look for when I target an equal lows. When price just keeps like pounding off of something, we're going to break those lows when this thing comes down easily. And there's more of a daily level that I'm looking at here, as well as a bigger time frame trend. We've tapped into it. Now I'm looking for this price to come run back into that, right? So you can trade what I like to call as like inner and outer trend lines, right? So we have an inner trend line here. When they break, you can trade price back down to outer trend lines, and vice versa for buys. When you have an inner trend line and it breaks, you could trade price back to your outer trend lines. So that's what I'm doing for the dollar in EU. And this is just what I'm waiting on. And the people might ask, like, okay, well, if you think that it's going to bounce off of that and create that lower high, then why would you close? I was in when price melted down and broke this level, I was in last week thinking maybe there would be no pullback and this price is going to rip. And I'm fine with taking a loss. What I don't want to do, what I did here was instead of losing 2% on this, when if price were to come up and hit my stop, I lose 2%. I risk 2% on everything. But instead, what I did was cut my loss short. I cut less than 2%. And then I just give myself like patience, and I can stalk a trade for, I could stalk a trade. Some of you guys that are in here can vouch for me. How long do we stalk EG when this thing was coming down on a monthly time frame? Who is in here that's in the no risk group that was in here when I was talking about EG on a monthly and weekly time frame and stalking this thing as a fake out off of these levels, right? And that price would close back below these daily lows or daily highs, and this thing would run back to the downside. I'll be patient when things are in these like kind of no man land areas. I'm not antsy. I don't need to trade every day or every second. So I can be patient on it. And that's what I wanted to do with EU, is just be patient and let it show me more evidence that we would hold this high here or this lower high and trade back below. And when we do, I'll gladly take that short position more comfortably, knowing that I could take that sell, set my stop back up here, and just do what I need to do trading it. Now, just a few more examples. Anyone have any questions with like the way I set those up or explain it? Anyone at all? Any kind of questions at all? You can unmute yourself or type in the chat. It doesn't matter. You guys don't have to be shy either. Guess everyone's listening. Does it make sense then? Let me know in the chat if this is making sense to you guys. Does it make sense to you guys? Some of these things, like, I don't know, maybe they don't. Maybe my trading is crazy sometimes, but 777. Oh, Hussein's in the house. Hussein says it makes sense. Makes sense to anyone else. Everyone's quiet. Sevens, ones, yes, nos.
Hey, Tanner.
What's up?
If you see the euro dropping like this, what about the pound? Do you see like a major drop, like you're talking for the pound as well?
Well, and this is where I get into this situation with the euro and the pound, because technically my buy setup on GA already triggered, and I was watching this thing because what I wasn't you see this major consolidation, price broke to the high side, we violate the downside, we break back in. This was a break over the my equilibrium, my price that I wanted to see, and that would have been like my actual buy signal as far as GA goes. But I wanted to kind of sit quiet early this week, and what I wanted to do was just stalk EU, and I wanted to leave a lot of other things alone. But with the pound and this being FU candles as well, look on the 4 hour, you got a breakout given the F and a break candle that breaks back in. This is a accumulation schematic as well. And on a higher time frame on a daily, we have an accumulation schematic here as well. So I was thinking maybe that there was some good news on trade deals signed for Brexit, maybe a little strength in the pound. I think last week and over the weekend or something like that. So I was thinking of GA was looking like a rally, and I'd have been up on some money right now, but I'm just going to be quiet on it and kind of let it do its thing. EG took out some highs here that I liked as well. EG took out some highs, created a lower high. I figured these lows would be broken. So if this continues trading to the downside, and we have what it looks like to be maybe a little reversal on the pound pairs. GN as well, it broke price that I was looking at. I would have been up on this too, or pretty early this week. There would have been a couple good trades, but I mean, I'm just sitting quiet. I don't want to force some things. I'm focused on EU right now. I don't want to trade a couple things at one time. I want to put my focus, where I think a quality trade is at right now. And EU is, how it is. Like when I was talking about short, sometimes some of these things that I'll just be waiting on. Some of you guys know who trade with no risk. These things, I mean, the pound up here, when we were looking at price and we got squeezed on a short, and then price ended up melting, and I knew a meltdown was coming. That's kind of how I'm feeling. Like I feel like EU has room to, if we set up and come where I want and break back below and retest that, we've got room for a nice meltdown, a nice correction. And these are the kind of trades I wait for. I'm patient. I give it time. I just let that gut feeling sink in, and then when it's time to pull the trigger, I just go in it. It's like Euro CAD last week, same kind of trade idea. I have my consolidation, price moves where I want, we violate the high, we hold here. It gave a couple entries, but at the time when I was looking at it, I was looking at this trend here. We have broke through, created a lower high. I set the stop just above there, entered it, price melted. This was a before of Euro CAD. This is a before of it, and then this is the after. Price just melts off. I mean, I would have liked to capitalize on the whole move, but once I was up like 100 pips, I just scaled out. I didn't stay in. As well as Euro AUD was another one last week. I was zooming with someone, like a one-on-one live on Zoom, and Euro AUD was one that I had explained. Price broke in my direction, violated it, rode that 50%, broke it. A kill zone was sitting there, price retest, and had a nice melt off. So Euro AUD was another one. Nice trend break. This thing just lined up with it. Was another one. I didn't hold the whole thing, but I held a decent move, like 60 pips or so, and this thing just, it melts. This is the kind of structure I want to see, right? This is what I want to see with EU right now. I want to see that violation, which we have. I want to see price hold that lower high. I want to see that break, and then off of that test is where I'll take that. So EU will be no different. If it can show me that this is a fake out, breaking back above the trend, and that this was what I thought, a violation of the price trap, as well as this is going to be a lower high, and holding it and breaking back below that, I'll trade this. I will trade this, and I'll update, considering I gave it to the free group too as a trade idea. I'll update both groups when I enter this again. But yeah, so I'm being patient right now. I'm giving this thing time to set up, and now that I looked at it after the market open, maybe it's something I should have done last week, but who knows? Trading isn't perfect, and I'm not going to act like everything goes great all the time, because it doesn't. So it's better to cut the loss early than, what if it doesn't come back down? What if it doesn't hold? What if the dollar breaks down and it keeps running with my overall analysis and it doesn't give the bounce I want? Then I'll be thankful later on that I did cut the loss. And that's one good thing. Like, that's one solid thing I'm pretty good at doing, is just, I've been through the whole account blowing, things like that. One good thing it is that I can do is I can realize these losers, things I don't need to hold on to, things that aren't quality. And once you take your mind off of those positions that are negative, that you have running, that are losing, those winners kind of present themselves. So I don't, if I'm too focused on holding on to a losing trade, and I'm emotionally just invested in this thing, and in all reality, it's a trash trade idea, and I'm not allowing myself to see that, well, that's where the emotions come into play. And I'm pretty decent at it, and I can cut the loss even if it doesn't need to be a loss. So that's one thing I can say I'm pretty decent at. There's a lot of things, like you guys know, going into the end of the year, I take a lot of time, like, off of just trading live. I go through, I start I start to back test my strategy. I start to see what I can do different. What can I tweak? I go back to trades, good trades, bad trades, ask, what can I do to be better here or there? And one thing that I was getting carried away with this year, especially this last year, was like trying to get these, crazy entries on things that sometimes I would get squeezed out of positions that didn't need to happen. And you just have to ask yourself, and then truthfully be able to answer, what is it that I'm doing that just honestly sucks? What is not good for my trading, and what is? And a lot of people fail to do that, as well as a lot of people think, maybe, who knows, whatever it is you're thinking. But yeah. So any questions at all then? We've been on here for about an hour. Um, I just wanted to break down a few things as far as structure. As far as now, digging into my strategy is not something that I really do, but I leak a little bit with finding these points in the market that these price traps, finding the market to push into your favor, letting it violate that area and trade back into it. By the time that happens, there's so much evidence that gets left behind that, and you are able to trade some decent trades. I mean, I have really just been, I've got good over like 2020. I got good at trading manipulation, if that's what people want to call it, or these times when these daily lows get taken out or daily highs get taken out. And I'm fairly decent at getting in, right? As soon as Bitcoin broke all time highs, the whole world's talking about it. The whole world was. And I was sitting there and I was looking at this thing. What happened? They broke the all time highs. The daily candles closed right back into it. When they did, price peaked above this. Price peaked above right here on these daily candles, right above it. I don't care if it's one tick or not. If it'll break daily highs or something, I'm interested. But I'm not ignorant. I don't run against the trend too crazy, but I will sit there and I will wait to see if an opportunity presents itself. And sure enough, when we broke those highs, I'll have to, maybe I could find the analysis somewhere, but I had short positions, well, one short position off of this somewhere. I don't even remember. It was somewhere off of here or here, maybe even down here. But no, that couldn't have. That seems like more recent times. I actually think once we broke through that and we pulled back up over here is where I did it. I would have to look at the history and look, but there's a structure here after this. I actually think this is what it was. How price would peak out here, peaked out here. We took out the highs, closed back into those daily highs, like I like to see. This is exactly where it was at. That's where it was at, and those are just it though. These like price points where these price points where price will just barely take out these areas, and it's just a very interesting area for me. Now that I'm looking at this, man, something, no, I was right here. Something doesn't look right about this. Yeah, let me go back and mark the all-time highs. This was it here. Yeah, this was it. I think I was looking at somewhere down here, but I can explain it. It's the same setup. I trade the same setups on short side and long side. But yeah, here it was. I had a same thing, price pushing up, pushing up, pushing up. That manipulation, once price closed back into that range, that's where I shorted. And I shorted in here and closed it like on this wick right here. And it had a nice, it pulled back. And then I was saying, oh, I'm glad I closed it. And then price melted off. And I was like, never mind. I'm not, I'm not happy that I closed it, but what can you do? But yeah, my short positions, if you see, there's like a pattern here that I trade. Same thing on gold. I like to see those daily like lows or highs get washed out, and then I like to trade back into that with strength. So yeah, Bitcoin was really just the same thing. Once we peaked those all-time highs right here, this line was the all-time highs. Once it ran through that and then just closed back into that daily range, that's when I caught interest. Now, once we built the accumulation side of things back up, once we built the accumulation, let me go back down. Oh, right here. Yeah, I knew this thing's going to rip out of here. Once it got back up on those highs and just held that support, it was like the same thing as gold here. Once we got back up here and held the support, I knew this thing is going to fly out of here. It's perfect. Do I see Bitcoin doing a nice retracement? Now, so there is something interesting I have on Bitcoin as far as a measured move. This is just a theory, something that I'm going to see how it plays out. I'm not like saying this is going to happen or dead set. I'm not really, I'm good at measured moves on price traps, but we'll see. We'll see what happens. Now, I was thinking Bitcoin would have a clear run up to 39,184. Let's see what happens when it hits that. It's the same thing. We go from the accumulation down here to the price moving up here, a big correction. Let's say that price corrected at 79% of this price trap down here. Let's see if we can have that same kind of pattern maybe on Bitcoin again. Maybe it's going to make that nice big measured move to the upside, and price will have a deep correction on this back down to like 24 or something, right? So that would be ideally a price at 39,000 and a retrace back to like 23 or 20, 22, 21 area. If Bitcoin is your thing and you want to invest, why not? That would be a big push and a really nice correction to the downside, kind of like what happened here. And if that's your thing and what you want to invest in, do it. But let's see what happens here. Let's see what happens here on weekly and daily candles at 39 184. Let's see what happens there. And that's where I'll catch interest, because knowing what happened here on the short side and the opportunity presented, I want to know what's going to happen here when price hits, and what kind of short opportunity will there be at that time. Maybe it doesn't happen at all, maybe it violates, but if the price action is there at the time, I'll trade it. I'll trade anything with price. I'm not a big Bitcoin or crypto guy, so I don't really know. As far as the fundamentals go, I'm not crazy like good at it, so I couldn't tell you. I don't really know why it's running, to be honest with you. I mean, it's something, I don't know. I don't get it. So it's not my thing. I'm more to the metals. So yeah, gold and silver up, and EU. If you guys have taken note on EU, what I wanted on EU, if it does what I want, and price holds this price trap here, and it has shown me the breakout. It has shown me what I'm assuming right now is a fake out, and we are closing back underneath this range. If we can hold that and break back below this, I will take it off the test. No problem doing that. The structure is there. I will like that trade idea. So anything you guys want me to look at then? Any other pairs? Something that I didn't go over before I end this? XRP. See, XRP, they had some things where they were lying to investors or something. The fundamentals aren't good with that. I already don't like crypto as it is, so I'm actually not too interested in XRP. It crashed over 60% off of bad news and something that happened with those guys doing something with the shares. I don't even know. I don't know the full story, but I know it's not good. So I don't even really, yeah. XRP is not on my radar. Here's something else too. If you guys are not, stay plugged in with the no risk free group. Now we have obviously like our paid group too, which we Zoom a couple Zooms a week, maybe like 8 Zooms a week or something. Me, Peter, Hussein, Trap King bangs out the signals. This guy goes crazy on the signals. Trap King really has put in work on the signals. So yeah, he is. We've had some pretty decent months off of just some of his pip counts. They're all in here. The transparency is there, so it's not hindsight. It's not fake, like made up numbers. Yeah, here's some like 1,037 for December. Keep going up. Look through some of his trade ideas. Pretty decent. He trades a lot of price traps. Peter's more EMAs, as well as some structure. Hussein's pretty similar to me. I mean, we're all similar, but we have our like little, we all tweak our own little thing, but it's all pretty similar, I would say. But yeah, Trap King, I mean, he puts his pip count in here. You take every trade he's taken. Pretty decent amount of pips pumped out. We all post a little bit in our channels, and just whatever we have. We have all the things that we do together. So what I was gonna do was post in here. If you guys could, here's the Discord link for the free no risk group, and if you guys could, please share it with your friends. We're trying to really grow no risk this year, and just do our thing with helping people and just bringing a different kind of transparency to the trading game. And it's not all perfect. Our trade ideas aren't all perfect. Nothing is, and that's the reality. It's not home runs. every single week, month, every day, right? Everybody takes losses. So it is what it is. Be realistic and reasonable with yourself, your trading, investment, all of that. Don't overdo it. What I want to do is try to do like maybe one Zoom call a week on Sundays or something for the free group, and as well as we're gonna post a little bit of trade ideas. There's things that we'll post in there like on the resources side, Kitco, a few videos from them, or like some Peter Schiff or something. Listen to him, learn some fundamentals, learn from people that have huge funds. They're trading massive amounts of money, investing it. Really legit people own like these funds and firms that are trading on Wall Street, things like that. You listen to them, you learn. That's what I've done, and I'll post a little bit about things that I see value in that are in the group. But if you guys could just, I mean, even if you were to share it with one of your trade groups or trading buddies, whatever, it would help us out, just kind of grow. Yeah, we're not here to really like push that, join our group and pay and blah blah blah. We've got the free group. We want to open up some value to the public, and so if you want to work closer with us, you can hit us up or just follow us for a while in there and do your thing. And if you see value in it, hit us up and get inside of the group. And hopefully we grow like a couple hundred people this next few months, and just have a trading community. That's really what it's about. Get in the chat, chop it up. Like, you might see something and somebody might be in a trade and you might save them from a loss or whatever, vice versa. So put your charts in there, just chop it up in the chat, and we'll just trade together. We want to get the chat active and just really grow. I'm excited for 2021. See what kind of trades we can get into, what kind of mess we can make, and things like that. So that's pretty much it for me. Anything else for anyone else? Speak now. Any pairs, anything? Yes, sir. Yes, sir. Same.
Hey, Tanner, will you peep GBTCHF?
Yeah, we can have a look at it. See, this thing looks like, obviously pretty bullish too. And these pound pairs, I just think, man, there's, with that Brexit too, I'll have to go look at the news on Brexit as well. Let me see this here on a bigger time frame. You just plot up a couple trends and stuff. Just look at it, see what it's been up to. Yeah, this could pop up to this trend here through these daily highs too. That would make sense, because look at this on a daily now. See how you have this support here? Price comes down and washes that out, gives a perfect test off of that. These are my favorite kind of trades, when people get scared there like that. Now what you see on the way up is a low here, created a higher low, then a higher low on the daily again, right? And it's creeping up towards a spot where everyone would be like, a short, all a short again. Now, you guys know how I explain this. It's like skipping a rock across the water. Once it hits too many times, the rock goes through. It's no different with support and resistance. So think about it that way. I've seen this thing hit 1, 2, 3, 4, 5 times. Like, what are the odds that now we've spiked these daily lows here, created some liquidity to run at this thing? And this wouldn't surprise me if we don't pop through this and trade higher. It wouldn't surprise me if we even pop through this and trade through this daily trend line, depending on how you want to look at this thing, right? Trend lines this is why they're not like my favorite, is because you can see how price will like respect it here and pop through it and test it here and kind of pop through it and test it here. And now we're popped over it and tested it here. So I'm just going to look at it like this and say that this definitely has room to run through these daily highs and to the upside. That would run in confluence with my other pound pair setup. So I don't know. It's early in the week too. I want to see how price will set up this week. I want to see how some trades, come to life. Just give it some time. You have access to me anyway. So we'll see what happens. It's only Sunday now. Let's see what happens Monday, Tuesday, and we'll get a little something going. we missed the gold buy, so we'll have to see. We'll have to see what we can get into. Again, we're just stalking EU for now, and let's just see what happens, see what we like, see what sets up, and see what sets up here, see what we can get into. So maybe hopefully the dollar, like I want to bounce, and if that happens, we'll rip some nice trades on like UCAD and UJ and things like that. So just be patient. We will see. We'll see what happens here this week. Not too much evidence right now, but yeah, that's gonna be it for me. Then I will see you guys probably like maybe next Sunday or something, and just keep an eye on the chat and chop it up in the chat. Again, share the link with your guys' friends, trade groups, whatever. Like let's just get into 2021 and just trade a bit. So I'll catch you guys later on though. Peace out.